Hello everyone and welcome to the Compak Asset Management Market Wrap YouTube update for October 30th, 2020. I'm Ansari, President of Compak Asset Management. Thank you for joining me today. I'm going to talk about the pandemic. Obviously, we're hitting new highs in the case numbers, so we'll talk about that and the impact on the markets, talk about the election, what I think might or might not happen, and how that might impact the markets. We did have one of the worst weeks in the market since March. So we will take a look at where we are as far as the charts are concerned. And this time I'm going to show you a 60-minute chart where each bar is going to be 60 minutes. And what is the short-term, very short-term picture for the next week or two. And then we'll take a look at the daily charts, the weeklies, and take a longer-term view of the market. So let's start, unfortunately, with the pandemic. We are looking at numbers. We are starting to sort of drift back down here. This is the reopening chart, and we're starting to sort of slow down a little, even though we did get GDP numbers that showed the GDP grew by 33.1% for the third quarter, but that did not still make up for all the GDP that we lost in the second quarter. So it was the best quarter that we've ever had in GDP, following the worst quarter that we've had since the Depression. So we're still not growing as far as the economy is concerned, and probably will take us all of 2021 to get back to where we were as far as pre-pandemic levels go. Looking at some of the reopening, we are starting to see obviously growth in some of these sectors where video conferencing is doing well, home fitness apps, news ratings. Everybody's watching the news with what is going on with the elections, but then we are also seeing the contraction and nobody's going to the theaters. Netflix is raising prices, which could be good for Netflix. We'll have to wait and see how many people they lose. I don't think they'll lose. TSA passengers still down. We are starting to see some people starting to travel again, but still not there, especially if we get this third wave, second wave, whatever wave you want to call it, as the numbers go up for the virus, which is expected because we are seeing the numbers go up in Europe. Here's the numbers. This is in orange is the 7-day is the testing, and this is the 7-day average. We can see that testing is going up, but the infection rate is going up faster than the testing rate. So saying that because we are getting higher numbers because of testing, yes, we are getting, but the percentage increase in the infection rate is going up. And I look at the 7-day averages because day to day we do get spikes, but we are seeing the 7-day averages hit new all-time highs. And today we hit a new number for Thursday, the highest number ever in the number of infections. And these are all new areas. It's not New York, it's not California. There are certain areas in Texas, but it's a number of states that initially were not impacted by the virus are now being impacted because now the virus has spread into those remote areas, and they will be even more difficult to control. Unfortunately, a lot of those remote areas do not have the best medical facilities or the hospitals, and their hospitals or the medical facilities could get overwhelmed fairly quickly. So we will see, unfortunately, once the infection rate goes up, the death rate usually follows about 3 to 4 weeks later. This is the picture we are getting out of Europe. You can see that in Belgium, it just exploded. And you can see that the same thing is happening in France. We are seeing lockdowns again in Germany. I don't think we go back to the severe lockdowns that we saw in March, but we are going to see isolated lockdowns in certain sectors of the economy. Restaurants, bars, gathering places, people are going to stop gathering because whatever we see in Europe, usually we are about a 3 to 4 week lag between us and Europe. That's what we saw last time around. I don't know if we're going to see the same thing this time because travel is not as prevalent. We don't have as many people coming from Europe here to the United States. But unfortunately, we already have the virus here in the United States, and it is spreading at a much faster rate. So with that, I think we are going to see the numbers go up. And as it gets colder in a number of states, we are going to see a lot of people that are going to be indoors, and that is going to have an impact. Now, what does this mean for the rest of us? Well, we're looking at markets. Well, looking at coming into the election, we see that people just don't invest. We see that the fund flows slow down going into the election. And after the election, you can see that everybody comes back up when we realize, oh, the world did not end. We still have a country. We're still okay. And this time it might be messier as far as the election is concerned. We might not know the results until 2 or 3 or 4 days after. But once we do get a result, whichever one it may be, I think the markets will adjust. The markets are an adjustive mechanism where they do adjust, and that's the good part. I always have said this, and as I said today on today's radio broadcast, which, by the way, you can get on a daily basis. All you have to do is download the app, and I'll show you later on how to get that. But I talked about that whenever you look at the history of our country, anytime that anybody that has gone short on America, has shorted American capitalism, unfortunately has ended up losing in the long term, fortunately. And that's the way I look at it. We go through these bumps and these ups and downs, but we always end up, because we have one of the most flexible systems in the world where we can change. We do make adjustments and we reinvent ourselves. We're not a brittle authoritarian government that goes one way and then they just break because they're not very flexible. That's what we've seen with a lot of these dictatorships, and that's what makes us different here in the United States, that we can and will make the changes that are necessary to advance as a society, and that's what makes us so great. Now, looking at the election, let's get into that a little bit more. We are looking at, when you look at COVID in historical perspective, here's the Spanish flu, here's the second wave of the flu of 9. You can see that we've seen these, and when you put COVID in perspective, it is not the end of the world. Now, as far as the U.S. market is concerned, we are going to see volatility going into the election. If we do see a blue wave, as it's being called, that means that the Democrats win the House of Representatives, they win the Senate, and they win the White House. That will give the market is expected that we will get a big stimulus program, that we will get a big infrastructure spend. That will be good for the market, because the more money that is being put into the system, usually it ends up different parts of the system, different as far as the market is concerned, different sectors might do well, and we're starting to see some of that with the rotation already starting to come out of technology, where we saw a number of earnings come out yesterday in the markets, and they were not good. The Dow was down 6.5% for the week. S&P was down about 5.5%, so was the NASDAQ. So we did see in Twitter, if I could say it, got tweeted, they lost about 20% today alone because the numbers were not good. But there are other areas of the market that are doing better. So I believe that if we do see a blue wave, we could see a lot. If we don't see a blue wave, let's say if we see a red wave where we see the President Trump wins, the Senate stays where it is, I still think we get a stimulus package. It might not be as large. Some of the Republican senators do not want to spend as much money as the president does. But if the president wins, I'm sure that the senators will fall in line and we will get a package. If we get a purple wave, or purple, which is not blue, not red, where the Senate remains Republican and the president and Biden wins the presidency, then Biden cannot do as much. He might try to do, but to change the laws and get a big stimulus program, we might not be able to get it. The time that I'm concerned about is as this virus picks up steam right now, we need the stimulus now. And if we do see a change in government, that new government does not take office until January 20th. So we nearly have 3 months, November, December, and January, before we can enact the new stimulus package if the lame duck president and the lame duck Senate does not go ahead and do that. And that is the period that I'm concerned with. But we do have also positive news where we could see Pfizer expected to put out its results for its third phase of its clinical trials. That is expected to be good. We are expecting that we are going to get some positive news on the vaccine. Once we get the positive news, that should be positive for the market, even though we might not see mass distribution of the vaccine until the end of the year or early part of next year. It'll take a while to get everybody inoculated and get the vaccine out in mass production, but the news will be out there, and then we'll know that, okay, in 2 months we will be past the virus and we can start living some sort of normal life again. So those are the positives and negatives, but I do expect some volatility. So what I did do today is look at a 60-minute chart, which I do look at on a daily basis, where I'm looking at each one of these red and green lines is 1 hour of trading. And you can see that we made a fifth wave high right here. Then we started a wave count to the downside. This is wave 1. Wave 2 was up. Wave 3 is down. We should get a bounce to wave 4, which brings us back to about 3,300 to 3,340. That's the two resistance areas that I've highlighted. Once we see this bounce, maybe early part of next week, then we are expected to come down to somewhere around, if we do break 3209, which was last month's low, then the next support comes in on the hourly chart somewhere around 3130. On the daily charts, if we look at this, that comes in exactly at the 200-day moving average, which happens to be 3130. So if we do break below somewhere around 3240, where we are today on the close, or we are 3270 is the close today, 69-point change. If we close below 3209, probably we are going to test the 200-day moving average. That needs to hold. If we don't, then we could be looking at much lower numbers. I don't know if we go there or not. I don't think in the S&P we are, because I think the NASDAQ looks a lot better than the S&P does, but that is a short-term picture of the S&P on the hourly basis, on a daily basis. Here's a weekly chart which shows that, again, we're in the fourth wave, and as you know, this was wave 1, 2, 3, and fourth waves are, as you've heard me say so many times on the radio, they're messy. They go back and forth, up and down, and that's what we're seeing right here. And we still have support. 3,000 becomes a critical number. If we do get below 3,200, 3,130, the 200-day, and then 3,000. If we get much below 3,000, then we could be in for a much deeper sell-off at that point in time. And then we're looking at much more something that is not a correction, but something more than that. We'll have to watch it. You have to raise some cash. I hope you did raise a little bit of cash in your portfolios, and that'll give you an opportunity to put some of that to work in some of the other opportunities that might come along in the next week or so. NASDAQ, this is why I'm more positive. We're still on a daily chart where one of these green and red bars is 1 day of trading. You can see a third wave high, a fourth wave decline, which we're in right now. As I mentioned, fourth waves are messy. That's where we are going back and forth. So we could see this turn back up, and that's why I'm looking for a fifth wave high. And as the NASDAQ turns up, it is going to push and pull the S&P along with it. This could be a week or two until we get past this election, until we have all the anxiety starts to come down and everybody turns off the news and goes back to whatever they were doing, and we forget about the daily election, all of the news and all of the stuff that we're hearing, and we go back to focusing on our lives. But it might take a week or so for us to decompress from that, and that's the way I'm looking at it right now. On the weekly charts, again, we are looking at the NASDAQ making a high in a fourth wave pullback. We are looking at support areas right here and right here, and we are at about 10.8. We could come down to 10.5. If we do, again, those are the opportunities I would be looking at. Gold, I said 1850 last week. We did come down to 1859 this week. That is still support around the 1850. If you break that, then we could come down to 1800 or 1750. But I don't think we go there. I think gold is building a nice base for the fifth wave to the upside. That is the way I'm looking at these markets. Again, if you like to get the daily broadcast, just simply click on the banner that you see below, and you can download the app. You can get the daily update where I do a 1 hour update. We have some wonderful guests from all around the world that join us on the daily broadcast, and some great guests on a daily basis, and my views. You can get that. And also, you can subscribe to this channel and share it with all your friends. Forward this to your friends so they can get all the information on a daily basis. If you like to, on a weekly basis, if you want help for us to evaluate your portfolio, we can do a free evaluation. All you have to do is click on the banners, or just go to compak.com, and we will do a free evaluation of your portfolio. I hope you have a wonderful, wonderful weekend. I will be back with you at the same time next week. Until then, good trading.